Yes, Nyabo. Forex trading is made up of 60% psychology.
What?
That means 60% of the things you do in forex trading involve your mind. They involve your head.
What?
You know? Then the remaining 40% is split into two.
What?
20%, 20%. 20% is going to be your trading strategy. Then the other 20% is your risk management. Actually, your risk management. How do you manage risk in trading? Are you going to risk everything on your account because you want to make a quick buck? There is a famous quote that says that forex trading is the hardest way to make easy money. In other words, with forex trading, yes, the money is there, because if you kinda do your research, the market capitalization of forex, in other words, the money that is exchanged daily on the forex market, is $6.3 trillion.
What? Bro, what are you talking about, man?
Now, if you get to think about it, $6.3 trillion, that's a lot of money out there for you and me to grab, right? So there is no way that you're going to grab this money if your psychology, if your mind is all messed up. If you go into trading with emotions, and by emotions, there are three major emotions that we talk about in trading. One is greed, two is fear, and three is FOMO. Let us break these emotions down. Greed is when you're already in profits, like you've placed a trade, it's already in profits. Instead of closing partial positions to secure the profits you're already having, you let the trade to continue running in a bid to carry more profit. And in an event that the market reverses against you, your whole profit will be washed out. Maybe even your capital can be blown out. So greed can destroy you actually in trading. Then fear, you can have your perfect setup, you've drawn your trend lines properly, everything is indicating that you should either buy or sell, but then you're hesitant to put in the trade, and the more you're hesitant, the more time is going, and you can end up missing out on that trade because of the fear that you're having. Number three is FOMO. FOMO is an abbreviation for fear of missing out. For example, if you go on a currency pair, maybe Euro USD, which is the most traded actually globally, has the highest volume, and is the best currency pair to trade for beginners. If you go for Euro USD and you find maybe the trend has already left you, then you kind of jump onto the trend when it's already moving, and you don't have a perfect entry because you're fearing to miss out, on the profits that others are already having. What you should keep in mind is that the forex market is here to stay, it's not going anywhere. If you miss that trade setup, just leave it, chill it. You'll be presented with other trading setups in future, even better ones, other than jumping on a trend that is already moving without a perfect entry, and you end up blowing your account. So that is a psychology for you. You should remove emotions from trading. And another dangerous thing in trading psychologically is excitement. This is especially for beginners, and even me myself, I have to confess I've experienced this. For example, if you're having a profitable trade, it's already in profits, you get excited, you begin taking screenshots, it's your first time to make this online money, taking screenshots, become excited, you want to show everyone, those blues, we call them blues. you can become excited, and instead of closing those profits, you're taking screenshots. By the time you look onto your charts again, the market is already reversing against you, and you're losing the profits that you'd have closed off in the first place. So that aspect of overexcitement should these trades should not excite you. Yes, you can see the money is there, but control your excitement, you know. So psychology is really an important key in the trading industry, and I wish that beginner traders pay more attention to the psychology that is involved in trading, you know. I don't know how many accounts I've blown so far, but I'm getting better, definitely. You should also get a mentor to teach you on how to move on the various trading aspects, you know, to help you to move faster in trading. Because if you're having a mentor, you can easily learn the concepts within a space of 6 months. You know, it's faster. But when you're learning on your own, you know, you're isolated, you don't have a community of traders to learn with, then it will take even a longer time, even up to a year, to grasp the concepts. You know, so it's better you have a mentor. A mentor is good for you because they have made these mistakes, and they'll warn you about the mistakes beforehand so that you don't make the same mistakes that they did. So there you learn faster. So I'd advise you to get a mentor, you know. Yeah, there are even some good forex traders on the internet that you can watch from. There is V-Dollar. Shout out to V-Dollar. There is Jeffrey Benson Forex. There is FX Alex G. There is the Trading Geek. You know, you can learn from these mentors because they really explain the issues of trading precisely and accurately.